Hello guys, welcome back to my YouTube channel. This discussion outlines 5 key takeaways related to investing and stock market strategies. The speaker draws insights from successful investors in behavioral psychology to provide valuable lessons for investors. Here's a breakdown of the main takeaways. 1. Zig when everyone else zags. Successful investing often involves going against the crowd. Independent thinking is crucial because consensus opinions are already priced into the market. Examples from investors like Ray Dalio, Carl Icahn, and Howard Marks emphasize the importance of non-consensus views. 2. Regression to the mean. The concept of regression to the mean suggests that extreme outcomes tend to move back toward the average. This principle is illustrated through examples including Israeli flight instructors and stock market profitability. Mean reversion is a powerful force in investing, and understanding it is key to making informed decisions. 3. The Acquirer'S multiple. The Acquirer'S multiple is an enhanced valuation metric that considers a company's enterprise value relative to its operating earnings. This metric accounts for a company's debt and cash reserves, providing a more comprehensive view of its value. Buying companies with a low Acquirer'S multiple can increase the likelihood of mean reversion and potential upside. 4. The broken leg problem. Implementing a simple rules-based strategy like the Acquirer'S multiple can be more effective than relying on expert judgment. Experts often override simple rules with subjective factors leading to suboptimal decisions. Simple rules can help investors avoid finding broken legs in their decision-making process. 5. So why doesn't everyone do it? The question addresses why not everyone follows straightforward investment strategies if they can outperform the market. The answer lies in skepticism, lack of belief, and the challenge of maintaining discipline during market fluctuations. The speaker emphasizes that successful investing requires persistent sacrifice and dedication, similar to maintaining a healthy lifestyle. These takeaways provide valuable insights into a strategic approach to investing, emphasizing the importance of independent thinking, understanding market dynamics, and sticking to a well-defined investment strategy. If you enjoyed this video, please like and subscribe to my YouTube channel.